Hi, everyone. I'm Ivan Bayuki, and welcome back to Wall Street Silver. Our guest today is Rich Checkan. He is the president of Asset Strategy International. Thanks for joining us, Rich.
Thanks for having me, Ivan. I'm looking forward to this.
Yeah, it's an absolute pleasure. So, Rich, everyone lately is talking about the yield curve lately, but the Fed seems to be, they keep on hiking as we go into a recession, and it doesn't make sense to any of us. Can you explain to our audience what you think is going on, Rich?
Yeah, first off, they really don't have a choice. I would not want to be Fed Chairman Powell or anybody on the Federal Open Market Committee meeting right now. They're in a horrible position. They need to increase interest rates, and what little they've done. I mean, everybody's talking about the 75 basis point rate hikes. They've taken us up to 2.25 to 2.5. Inflation, I think, has month on month gone down, if you will, but that doesn't mean we're seeing less inflation. We're still seeing 8.5% over last year.
Today, we received news that our economy had 0% inflation.
To get on top of that, we need another 700 basis points, or 7% increase in interest rates. He can't go that high, Ivan. I mean, the bottom line is, with $30 trillion in debt, every 1 percentage point increase in interest rates is another $27 million per day to service that debt. You can't do it. There has to be some sort of pivot at some point.
Do you honestly believe, Rich, that it's too late for the Fed to rip off the Band-Aid and the market has kind of sensed their uncertainty?
Yeah, I mean, even last year when, a year ago when they started misinterpreting and misleading, if you will, the public as to what was going on. I mean, they claimed that they had no idea this was going on. They created this problem. You can't increase the money supply. Inflation, by definition, is an increase in the money supply until they changed the definition, 20 years ago. So that is what they did. There is no two ways about it. You stop economies from delivering products and you increase the money supply astronomically, you're going to get inflation. There's no way they should have been surprised by it, and they were too late a year ago. They just can't get out of this. It's two bitter medicines that they don't want to take.
So when do you think they'll actually pause or pivot rate hikes? Do you think another 12 months, another 2 years, year and a half?
I don't think they're going to go that far. I could be surprised. I just don't think they have the resolve of a Volcker back in the 70s. I think what's going to happen is we're going to see something again in September. I think that's already baked in. We may see one more after that. I think the end of this year, we probably see a pause, maybe not a pivot, but a pause initially. And eventually something's going to happen that's going to trigger them to start dropping interest rates again. The big problem is they really want to drop interest rates, but they can't. When you're at zero, I don't think the American public are going to swallow negative interest like the Europeans and others have.
Right. In your opinion, Rich, is the world facing a stagflation and a recession period? And how big of a buying opportunity do we have in precious metals right now?
Yeah, so two really good questions. First off, yes, I do believe it's coming to stagflation. I mean, the bottom line is the inflationary pressures are out there. When you look at the consumer price index at what it's at, you look at producer price index over 11 last reading, that is going to filter down into consumer prices. Let's face it, manufacturers are not going to give up their profits. They're going to pass those costs on to consumers and prices are going to go up. Wages are not keeping up. The unemployment or the employment figures are okay and they're stable right now. That's probably why most people don't think we're in stagflation territory right now, but that's going to turn. I think we're already seeing signs that that's going to turn. And you've got the market pulling back, and you've got inflation still holding at very, very lofty levels. I don't know what else you call it. Side note on that, people are confusing what's going on with the markets with what they're seeing at the gas pump or in the stores.
Right.
So those numbers at the gas pump and at the stores are inflationary, right? So it's hurting your pocketbook. If your wages aren't going up, you're buying less than you used to. You're giving up something in your lifestyle suffering.
Right.
The asset prices are coming down, right? Because that's what the Fed's trying to do. They're trying to deflate the everything bubble they created. So even though it's an inflationary environment for consumers, for assets, it's deflationary. And I hear this all the time that gold is not doing its job, right? Yeah, it's falling in price so far this year, but let's look at the tallies so far this year. Dow is down 8%, deflating. S&P down 11%.
Right.
NASDAQ down 18%. Bitcoin down 48%. Silver, industrial and monetary metal, but very industrial, down 11%. Gold, less than 2% for the year. It's under 2% falling this year. So in a deflationary environment, gold does its job by falling slower than everything else. And that's how you preserve your purchasing power. And I think in this environment, gold is a steal.
Sorry to cut you off. In the past
Yeah.
22 years, Rich, what is it about? Like almost 500% gains gold has made? What do you believe it is?
Absolutely, it is. It's over 500% in the past 22 years. So far this millennium. Now you can pick your starting point
Right.
and make it look good for gold, et cetera. But let's face it, gold peaked and dropped by 50% in that time period. It's still up 500 something percent. The three US indices are only up about 160 to 180% in that time period.
Wow.
So gold has vastly outperformed, even though you're not going to get the mainstream headlines. And the other thing is the dollar's been strong, right? Not because of anything fundamentally strong in the dollar. I think it's very weak, but compared to other weak currencies,
Right.
it's looking pretty good. It's up 20% at one point this year. And against those headwinds, gold is still only down 2%. In every other currency, gold's hitting all-time highs. I think it's a steal here in dollars.
So now that we're on the topic of precious metals, the great topic that we love, do you believe prices in the precious metals industry, is it manipulated in the paper markets? And what do you make of the JP Morgan traders that were just found guilty for spoofing gold?
You know what? Criminals should go to jail. I sleep nights. I take care of our customers, and I used to do a lot of listening to Zig Ziglar. I don't know if you ever heard of him before, but I love him. He used to say the best way to get everything you want and more in life is to help more people get everything they want and more in life. He didn't say take it from them, right? So if you're a criminal, you should go to jail. I have no problems with that. I think justice is getting served. I think there's a lot more justice to be doled out, but I like to see it actually happening as opposed to getting slapped on the wrist, paying a fine and moving on because the business was so lucrative. And that's what we've been seeing with the bullion banks in the past. I think every market is manipulated, Ivan, and it starts with the Fed. I mean, they manipulate the currency of the world's reserve currency, and every market has an impact or is impacted. I think whether it be intentional, overt or covert, every market is manipulated. I think what the bullion banks saw was an opportunity where they could take advantage and do what we call propitious trading, right? They had insights that nobody else had, and they could sell a bunch of contracts and drive the price through stop losses and then buy it back for cheap. I think that's been going on forever.
Which is absolutely crazy that
well, we don't have that opportunity as investors to do that ourselves. So
right. That's only what they're doing. If you look, what is your 5-year outlook for gold and silver? Does it even matter what the price is, or just the fundamentals you go by, Rich?
Yeah, well, I'm a firm believer that you buy gold for wealth insurance. There are points where everything comes together. There's a nice convergence, and you can actually see the factors involved and profit from owning gold and silver at certain levels. And I think now's one of them. But my primary reason to buy gold is for wealth insurance always. I think everybody ought to have 5-10% of it in their portfolio and never touch it unless they need it. And, in 5 years, gold is still going to do its job, whether it's up or down in the short term. If you back off on the graph for gold and look 100 years, it's steadily moving up because we measure it in fiat, and fiat loses value over time. I don't care what fiat it is. So buying gold just makes sense for every investor. You look a few years forward, I think we're going to make new all-time highs. I think they could be north of $3,000. I don't know for sure. In 5 years' time, I think we may already be on the downswing toward a bit of a longer term, broader correction, and then coming back up again, just like we
Right.
did after 2011. So 5 years from now, the profit motive metal you might be selling, but the wealth insurance you never get rid of. It'll still do its job, even at a little bit lower price.
Yeah, exactly. So we talked lots about gold. Let's talk a little bit about silver. It's recently taken a dive, but fought back to the $20 range. Are you surprised silver and gold hasn't like, I know a lot of people say they haven't taken off at where we'd expect them to be, but are you surprised we haven't seen that massive jump, or would you rather just see a steady rise?
I would always rather see a steady rise. I mean,
Right.
if you see a massive jump, you're going to see a massive fall. I don't care what market it is, right? So,
Right.
and nobody likes that. Nobody feels comfortable in that
No.
environment. So, I think slow and steady. Although, understand, since the advent of exchange traded funds for metals, you're going to see more volatility. Right. So you've seen that. I think if you go back and you look since 2003, I think when the first ETF came out, GLD, you've seen more volatility in gold and silver markets because weak hands can jump in and jump out. Whereas it used to be you had to take delivery, send it back, and it went in the hands of stronger hands. So there's going to be more volatility, no question about it. But I do think gold will continue to plod upward as a general rule. I think silver will continue to be more volatile. I love it anytime the gold silver ratio is over 80. We hit 127. I was screaming from the hilltops by it here because it's just not normal. We've never seen that before.
Yeah, that's crazy.
Yeah, and I do think it's going to try to work its way down. There was a bit of overproduction of silver in that, a lot of the things it could be used for couldn't be used or couldn't be produced when the economy shut down. So you had a little bit of a backlog of silver. I'm not surprised to see silver suffer a bit more as an industrial metal, but I think it'll come out of the funk as well.
So right now in the stock market, we're seeing a little bit of a rally. Do you believe there's a complacency rally happening now? And is the real crash coming soon?
I'm not a stock market analyst. I know over time.
Speculate.
Yeah, I know over time the stock market keeps treading higher as well. It really hasn't done a whole lot when you look in gold terms. Right. If you look in dollar terms, stock market's making new highs. It did all last year. But in gold terms, it's not very impressive. I think that's going to continue. I think real assets will hold value. I think the bubbles are inflated until the bubble pops. And I don't know exactly when that's coming. We may have already seen it.
Right.
I don't know that we've pulled back enough to have seen it. Be honest with you.
So, Rich, what are you buying now? Gold coins, silver coins, bars? What do you love the most?
Honestly, whatever's the cheapest at the time. I don't really have a preference personally between sovereign coins or bullion bars. If I can get something cheaper, I'll buy it that way. A lot of folks feel like you get liquidity or more liquidity if you buy a sovereign coin. And let's face it, they are very popular, especially when you look at Eagles and Maples, the two most popular coins in the world. But I've never had a problem in 26 years selling a gold bar either. So, or buying one.
What's your percentage, your allocation for silver to gold? Like, do you do 70% gold, the rest silver?
No, so I look at it two ways. I told you I like wealth insurance all the time. I look for profit at certain times, like now. So what I do is I buy 10% mainly in gold, maybe just a little bit in divisible silver for bartering, which I never think is going to come to fruition. But I have a little junk silver for divisibility, pre-1965 U.S. silver coins. And that's primarily gold. And I buy it, I hold it, I never sell it unless I have a crisis. And if I do, I sell it immediately and then try to replenish it as quick as I can. The for-profit times like these, I actually allocate an extra 10 to 15% of my investable assets to gold and silver. And actually, since it's for-profit, I weight that towards silver. Right. So that's another 60-40 mix of silver to gold right now for the for-profit assets, but I treat them very differently. If they double in price, I sell half. So I'm constantly rebalancing that, whereas the wealth insurance I never touch. So I treat them as two distinct pots.
Smart. Well, Rich, we are super grateful you came on the show to talk to Wall Street Silver. Where can everybody find you? Is our website where we'll put it in
Yeah.
the description as well.
Well, thank you very much. And thanks for having me. This has been a blast. We've been following you from afar for a while, so I'm glad you
Nice.
reached out. The website is www.assetstrategies.com. And we have a toll-free number as well, 800-831-0007. That's good in the US and Canada, and that's 10 better than James Bond. So.
Awesome. Well, thank you so much, Rich. We really appreciate it. And hopefully in the next 2-3 months, we can have you back and silver's above $30 an ounce.
We'll start pushing from this end. And if you'll have me, I'll be glad to come back. Thanks.
Awesome. Take care, Rich.